Good morning, good afternoon, and good evening, depending on where you may be in the world. My name is Sophia Arend, and I'm the Global Blockchain Business Council's Communications and Content Lead. It's my pleasure to welcome you today to the GBBC Virtual Members Forum. This is a bi-weekly webinar we host showcasing the innovative work of our members around the world. And today we have the pleasure to be joined by Sue Ennis and Tanya Woods of Hut 8 Mining for a presentation and live audience Q&A on how Hut 8 became one of North America's largest and oldest Bitcoin miners, as well as their innovative mining practices and their ESG initiatives. Just briefly, before we begin, I'd like to properly introduce Sue and Tanya. Sue is an emerging technology and innovation champion. She has served as a Fintech Advisor, speaker, and chartered investment manager. Her background is primarily focused on financial services, blockchain, and Fintech incubation. Prior to joining Hut 8, she was senior vice president of Shift Network, helping lead companies' ambitious visions to establish scalable blockchain-based data sharing protocol. Prior to Shift, she worked with some of the largest asset managers in North America with a primary focus on both global retail and institutional business development. Our other presenter, Tanya Woods, brings nearly 20 years of experience as a seasoned legal professional, successful strategic advocate, author, and global public speaker to her role at Hut 8. She has an established expertise in blockchain, peer-to-peer technology, social impact, and sustainable financial investing. Prior to joining Hut 8, Tanya completed 2 Masters of Laws, including specialization in technology law, and holds senior level positions nationally and at multinational organizations. She has also served as She also served as Managing Director of Canada's first Chamber of Digital Commerce. We are so pleased to have them here with us today, and we remind you that you have the opportunity to ask questions, so please enter them in the Q&A box at the bottom of your Zoom screen. I'll hand things over to Sue and Tanya to present. Thank you.
Thank you so much, Sophia. We are very excited to be here today. And I think how we're going to start is we'll just give a brief overview of who Hut 8 is, some of the different levels of our business, and then we'll go into, how we're looking at sustainability in mining and ESG initiatives. So a little bit about Hut 8. We are one of the oldest, largest, and most innovative digital asset miners in the Western Hemisphere. So we've been around since about late 2017, early 2018, which in crypto, especially in crypto mining, that is quite old, relatively speaking. We have one of the highest amounts of self-mined Bitcoin held on our balance sheet of any publicly traded company in the world. So we have also, one of the benefits that come with being a real pioneer and one of the oldest miners in the space is that we've successfully navigated through various market cycles. So we've been through the bear markets, we've been to the bull markets, and we've managed our balance sheet accordingly and our business accordingly. And that has enabled us to have, we really do contribute that to our success. We've got 3 lines of business. So we have a self-mining digital asset mining business, we have a white label hosting business, and then we have a yield strategy and earning revenue on our held Bitcoin prong of our business as well. So you can kind of look at us as a efficient digital asset miner meets sort of a core scientific white label hoster with a Silvergate bank, i.e. we earn money on our money, all in one company and in one stock. Next slide, please. So this slide again just talks about what I just briefly touched on. One of the most efficient digital asset miners in the industry, incredibly credible management team as well, which we will get into. Largest self-mined Bitcoin holdings, a very rapidly expanding fleet and energy capacity, which we will also be speaking about. We recently signed a deal and have made the decision to move from not just only being single-threaded Bitcoin miners, but to now mining into the Ethereum space, which we're really excited about, particularly with the growth of the decentralized finance space, NFTs, and just having that optionality in general, we thought was very important to our business objectives and obviously for creating shareholder value. And we're really excited about that. So next slide, please, Tanya. So before we go into how we're looking at sustainability with respect to mining and some of our ESG initiatives, let's just quickly go over how mining works and how profitability works in mining and sort of the factors that can be controlled and then can't be controlled as a miner. So So as a miner, there are three things that you can control. You can control your own hash rate. So that's the amount of energy that you're putting towards mining a block. You can control the cost that you're paying for the electricity to run your mining machines, and then obviously your corporate expenses. And so the things that a crypto miner doesn't control is the total network hash rate, the actual price of Bitcoin, the number of block, the number of block rewards, and the price of your mining equipment. Because particularly with price of mining equipment, that is very variable in terms of if there's a bull market, usually prices go up exponentially for equipment, and in a bear market, things sell off. Which does leave a lot of companies at risk of capital expenditure headwinds and balloons if you are only making mining purchases during bull market cycles. And that's something that we actively, proactively manage against. We have a proactive fleet management strategy, which means that about every 6 to 12 months, no matter what's happening in the market, we aim to refresh about 25% of our fleet. And the benefit of this is that, last year during the bear market, we were going shopping when everything was on sale. And now, given that we're in a bull market cycle, a lot of the equipment that we bought last year for $20 to $30 is now going for about $120 per terahash, which is extraordinary. But anyways, this is high level, some of the costs and some of the inputs that as a miner you can control in order to, set yourself up for success in the network. Next slide, please. This slide just speaks to, how we've grown throughout the years in terms of our actual power capacity. So we've got 109 megawatts of existing power in production right now, and we've grown that from about 95 megawatts in 2018. We recently just signed a deal with a company by the name of Validus Power to expand our power from about 109 megawatts to up to 100 megawatts with potentially an optionality for more than that starting in September. And the significance of this deal is what type of power will we be using to mine Bitcoin? And this deal is focused on using renewables, and this deal is focused on really building out a more sustainable practice with respect to how we actually go about our mining activities, which we will get into. And then, given current network hash dynamics, this means that we'll go from about anywhere from 6 to 7 Bitcoins per day, probably to at about approximately 10 Bitcoins per day. And we're hoping by August 2021. Next slide, please. So where is Hut Mining located? We are in the energy-rich province of Alberta. A lot of people who we speak to across the border call Alberta the Kuwait of North America, i.e. it is very rich in oil and gas and natural resources. So why are we there? As I just mentioned, it's very rich in wind, natural gas. We love the government of Alberta. It's an incredibly accommodative and friendly jurisdiction to miners. It's also freezing cold temperatures and very high winds, which are very good for keeping our machines cool. It's vast and desert-like expanse of, tons of available real estate for new facility development. And again, it's part of our growth trajectory with this recent deal that we signed with Validus Power. We'll be setting up shop there in Alberta, and we're very excited about that. So I will now hand it over to Tanya, who is our head of regulatory and also a sustainability and impact guru. And she's going to talk about, how we're looking at ESG, how we're looking at the environment as a shareholder and a stakeholder in our business. And I'll leave it to you, Tanya.
I wanted to say thanks to Sue. I think one of my most proud moments in the last few months has been really piquing her interest as an investor relations head and corporate development lead, and piquing the interest of our tech team and everybody through the company who actually are very big champions of our climate, care a lot about our world and the planet and our future. And just maybe some of them were less familiar with ESG. Certainly our CEO is well familiar with it. Sue has been familiar with it. But being familiar with something like ESG, and which is our sustainability guide for investors, guidepost rather, but being familiar with it and knowing how to actually put it into action is a whole other story. Taking a company that's been, for better or worse, more or less in startup mode and is ramping up at rapid pace and scale, and asking, the leaders and the board and the team to think about our climate is sort of like a moment of pause. And you hope, as someone who loves sustainability, wants us to have a planet that's good for all and all life, you hope everybody gets excited and says, we're in. But that's not a guarantee. And, in a lot of cases over the years, I've spent well over a decade, almost two actually, thinking about these topics and taking on different projects and whatnot. And, over the years, people say, well, what's the point? I just need return on my investment. I just want my money. And it's like, yeah, but you have to understand over time, if you look long-termist at things, if we have no planet, your money doesn't matter. And frankly, if companies are putting the quote unquote planet out of business, it really doesn't matter about your money. So there's been an amazing shift in mindset in the business ecosystem that I think innovation in the blockchain ecosystem is going to drive and support even more rapid pace. And I'm just absolutely delighted to be able to do this within HUD 8 and do it from a legal and a governance perspective. So now that I've stalled the segue to get the screen back up and share some of my thoughts, I'm just thrilled to tell you a little bit about how we're thinking about this. And as I started with, putting an idea, a framework like ESG into practice in a company, it's not a one size fits all that easily. You have to really be honest and candid about everything you're doing. And this is why we've taken a top down, bottom up approach. But the 4 pillars in front of you are really guiding everything that we're thinking about as a company. So we are taking a top down, bottom up approach, which Sue is actually like perfect at articulating, which we'll talk about in a moment. So I'll ask her to do that. But we are also raising awareness and building standards. Remember, we sit at the leading edge of innovation, the leading edge of our future of digital currency and finance, the leading edge of digital transactions. This is, as all of, I'm sure the viewers know, blockchain is the next frontier. It's been here for a little while. It's been over a decade, but it is very much building out our digital future. And so we need to think of standards and raising awareness and how we're going to do this. Obviously, we're not doing it alone. We're doing it with partners and very strategic partners. And we're being honest with ourselves. We're looking internally. We're saying, what are we doing that we can do better today? What are we doing that we could do better tomorrow? And how are we going to measure this? So Sue, let's dive in just a little bit into these topics.
Absolutely.
Merci.
Yeah. So what do we mean when we say we take a top down, but also bottom up approach? We think there's a lot of our peers in the industry who have made very loud headlines about commitments to sustainability, and we would love that. We think that's wonderful. However, in our opinion, you have to take a top down. So, the big commitment to sustainability, but also not only look at how is your business, what are the little tweaks and impacts that you can make on a day-to-day level, a bottom-up approach to your business operations. So we try and take both views and both avenues in terms of how HUD 8 is building out its sustainability initiatives. So from what we mean by top down is we're looking at carbon neutrality and carbon markets. And also, when we look at carbon neutrality and carbon markets, we will probably likely be working with RBC and their carbon neutrality and carbon markets. And why? Because they have the most stringent KYC policies. And the significance of that is it makes sure that we know that we're with a partner who's going to be providing us with the carbon offsets that actually do have an impact and are creating a sort of apples to apples offset versus what the pollution footprint that we're creating. And we think that's obviously very important. And then what do we mean when we say bottom up approach to sustainability? Things like reducing our landfill footprint. So when we get mining machines, they come in styrofoam, they come in tons of plastic. So instead of that waste going to a landfill, we've actually partnered with a company that is going to be collecting that waste, compressing it, and then reselling it elsewhere for use in industry. Another thing we're looking at is electrification of our vehicles. So moving from gas powered to electric powered vehicles for our machines on site. And also in general, just doing a real supply chain audit. Who are our partners and what are their ESG initiatives? Are there certain, practices that our partners are doing that perhaps maybe, we can find a better partner who has more of a focus on sustainability. So really looking through the supply chain of all parts of our business, how can we even create better supply chain partnerships that, again, look at the environment as a shareholder and a stakeholder in the business?
Absolutely. And then when we do this, I mean, one of the big pet peeves I have is greenwashing. I'm not a fan of greenwashing. This isn't a marketing ploy, but we do need to leverage our channels to actually get the word out. We need to raise awareness. We need to educate. I mean, as many of you may very well know, the narrative around Bitcoin mining specifically has been very negative about the environment, and it paints a brush, the same brush across the entire industry. And we can't do that. And our CEO has been incredibly vocal about that. Jamie is absolutely a force of nature, no pun intended, but we can all say something and it's a totally different thing to do it. But how are we going to measure each other? How are we going to show the rest of the world that's less familiar with how our business actually operates? How are we going to show them how we are different as a sector? How are we going to show them that we're different compared to other large data centers, other large tech players like Facebook, Google, AWS, and so on, that certainly have a much larger energy footprint and absolutely have a much larger impact on the environment than little HUD 8 sitting in a field in Alberta? And we really do have to make sure that we're making distinctions, but setting standards and frameworks. And so I'm sure if you've been following the Twitterverse in any level, you would know that our CEO is one of the founding CEOs in our micro ecosystem of miners, who's been leading the charge alongside Mike Saylor and Elon Musk, and really thinking about, okay, what are our standards going to be? Because we're fundamental to the future of finance. And right now is the time to set the standards out and really think through how we're going to measure our environmental impact and our progress. How are we going to measure how we are good for the world? And what does that actually look like? So I'm very excited to see progress in the discussion. I'm very excited to see where this is going to go. And of course, ready to roll up the sleeves right beside Jamie and the team. We have already come out in support of the Crypto Climate Accord. It didn't take much to convince us this is essential, and we're very keen on it. You see environmental and climate accords happening all over the world. You see them in trade negotiations, trade agreements. You see them, of course, in national policies. And if it's our job as industry to really bring it into our space and make it matter and make it last. So I'm very excited about that. And then also, of course, we have a brilliant head of sustainability who our whole team works very closely with, discussing ESG strategies that permeate far beyond just the Twitterverse. It permeates all the way down into our core metrics and everything that we do. So raising awareness is important. We need to challenge each other. We need to challenge our competitors. We need to challenge the broader data ecosystem and blockchain ecosystem to join us and take positive steps forward. And we need to all work together to set standards that we want to strive for, that we want to achieve, but that also mirror the needs of our planet and our communities. You can go ahead and switch that up.
Yeah. Oh dear.
We can dive in a little bit, Sue, maybe if you want to speak to our strategic partnerships. But as I mentioned at the start, our strategic partnerships are key. And, when you're thinking about sustainability, it is really, as Sue started, top down, bottom up, but it doesn't go far if you're doing top down, bottom up alone. And you need partners that can help you scale the efforts and make significant impact. So Sue, maybe you want to speak a little bit to our partnerships with these folks.
Yeah, so I had mentioned earlier that we recently made the decision to increase our optionality and actually begin mining Ethereum. And the partner that we chose to undertake that endeavor is NVIDIA, which we're incredibly excited about, world-class tech provider. So one of the things that this particular equipment that we bought from NVIDIA are these GPUs that were a limited fleet. So we're one of only 3 global customers who are actually able to procure this limited fleet of GPU miners. And what's exciting about this particular technology is the fact that it improves our mining efficiency exponentially. So we've got about 10,000 machines coming on, and the total footprint is going to be about 4 megawatts of power. So given current projections right now, it'll help us. And sorry, the plan is also that we'll be mining Ethereum, and we are going to be looking at once the machines are installed, how much we'll be hodling from the Ethereum side of things. But primarily what we'll be doing, at least for the time being, is mining Ethereum and then getting paid out in Bitcoin. So what this does is it's a 4 megawatt total footprint for the entire fleet. It also will enable us to mine Bitcoin at a price of about less than $2,500 Canadian. And again, we looked at that partnership as improving our actual efficiency. We partnered with Luxor Mining Pool, and that they're the ones who are enabling us to take advantage of arbitrage opportunities. So mine Ethereum and get paid out in Bitcoin. Luxor is absolutely industry leading, very efficient, and again, helping us meet those objectives of efficient, cost effective, and with the environment as a shareholder, reducing our footprint strategy. Validus Power. So we signed that deal with Validus Power that will begin coming online in the fall. And the significance of this is that one of the things we're able to sort of capture with this Validus Power deal is the ability to capture excess flare gas from oil and gas sites and convert it into digital energy to be used obviously for mining digital assets. And what's really interesting about this is the fact that oil and gas flare stacks are naturally about 30 to 50% inefficient. So no matter what an oil and gas producer does, that there will be flared gas vented into the atmosphere no matter what. And by law, oil and gas producers actually have to shut down production if they do vent a certain amount of flare gas. I believe it's on a weekly basis, possibly monthly. So they're highly incentivized to have partners like us and Validus come in, capture that excess flare gas so they can continue production. And then we in turn get otherwise wasted energy that is now being put to productive economic use. So those are sort of three of the examples of the strategic partnerships that we're building out and we'll continue to build out in order to support some of our sustainability goals. And Tanya, I'll leave it to you for the next, how we're going to be advancing operations.
Sure. Well, of course, when we speak about ESG for our company, we've made it very known that we have an intention to be a high-rated ESG investment opportunity. That takes a lot of work to get there. It's not a given. And this is why so few companies actually can easily slide into those portfolios. So it is very much something that we're considering. And if you're familiar with ESG at all and those metrics, what it means is you have to look at your operations through and through. You have to look at your long-term plans. You have to understand how you're going to measure progress and report it back transparently. Transparency is a hallmark of blockchain and certainly a very valuable piece of our business. There are many metrics in the world. There are GRI metrics, there are ESG metrics, there are SDGs, there are all kinds of ways that we measure things. But what matters at the end of the day is that we have metrics that actually tie to progress, to actual impact that is showing a difference is happening, that is showing that there are better practices that are less harmful to the environment, that there are better practices that support human well-being, that there are better practices that support our communities. And as an organization, we're certainly exploring a whole host of metrics live in real time now. And that is to get us to the longer term view around us being an absolute brilliant ESG play. So I think it's important to understand, when you're looking at companies in our space or companies even beyond our space, that this is a process and metrics matter very much. And you need to ask questions and look at, what are companies saying versus what are they doing and how are they accountable to their shareholders and to the larger community. So we're very much advancing in this direction. I'm very excited. In a short amount of time, we've made significant headwinds. And of course, we're bringing them to the US. So we have a very exciting growth announcement that went out last night that I'll let Sue expand on. But the point is, wherever we go, we're willing to lead, and we're willing to lead with the climate right beside us, the planet beside us, and our community beside us. And this is very, very important to our company, especially our CEO and our board. So I'm very proud to be sharing this information with all of you today, and grateful Sue included my perspective in the conversation. So Sue, I'll pass it back to you.
Yeah, so we just recently announced that we have been approved to list on the Nasdaq Global Select Market. So this is the highest tier of the Nasdaq trading markets. And this is extraordinary for us because number one, we're the first Canadian miner to reach this tier on the Nasdaq. We're run by a female CEO. We have a very diverse board and also a 50-50 male to female executive team leadership. And again, as Tanya has mentioned, you know, we really take this job seriously of being leaders in terms of using the environment, or sorry, considering the environment a shareholder and a stakeholder in our business. So we're incredibly excited to take that story internationally and really effectively put Canada on the map as being an absolute leader in innovation and Web 3.0 and, you know, the real frontier of blockchain technology. And yeah, so that's it for us in terms of our presentation. Apologies for the technology difficulties there, but yeah, maybe we can open it up for some Q&A, Sophia.
Excellent. Thank you so much. And we've received a number of questions. So I'll start from the top. Richard asks, what % of your power is hydro, wind, petroleum-based, solar? Perhaps you can give us, you know, perhaps you can dive into a little bit into the different sources of renewables that you're looking into. I know you already did, but maybe give some percentage. And
yeah. Right now we're about approximately 80% natural gas, 20% wind. Those numbers are definitely going to change once we flesh out and stand up this deal with Validus Power in early fall, because that will be more of a mix of renewables into, again, like we talked about, the wasted flare gas will then probably take a little bit off of that natural gas composition. So yeah, that's our mix.
Thank you. Somebody else asked, do you think you can reach carbon neutrality? If so, by when?
We're working on it. We haven't announced a date on that yet. And as a public company, I'm sure everyone can appreciate we can't give too many details, but soon-ish, and working on it.
Yeah.
I don't know if that's a fair answer. We hate that we can't answer things sometimes.
No, that's totally fair. We'll keep an eye out and we'll be sure to circulate the news on GBBC's side if and when it does come out. So somebody else asked, like, more broadly, is making mining more sustainable all about using renewables? I know you talked about a top-down approach, but also maybe you could discuss a little bit. They're asking about cryptos moving to different consensus mechanisms like proof of stake and what impact it has on sustainability.
Yeah, that's really cool and very interesting. You know, if Ethereum does move to proof of stake, I believe the reduction in the environmental impact is about 99.5%. So that's very interesting. There's also a couple of coins. For example, Cardano has, I believe, a 99.5% green footprint as well. But as Sophia just referenced, we do look at it from multi angles of the business and try and unpack all the different areas where we can have an impact, even if it's just a little impact, like reducing that landfill footprint by even, an extra millimeter, we think makes a difference. So Tanya, any color on that? Any additional?
Yeah, I think it's, again, when you're looking at holistic operations and considerations, there's also proactive things that we can do that are less high tech. There's cool projects out of, I think it was the Netherlands, had crypto tomatoes. One of the things about mining is you generate a lot of heat, and heat can be captured and moved around in different ways and utilized in different ways. And so greenhousing is always an interesting project. I think there's a ton of innovation that we're exploring right now that would be sort of secondary to our core line of business, but can nevertheless add value. I mean, even simple things like planting trees and, working on various innovation projects to advance carbon offsetting and such. There's a lot there. Even more simplistic is just education, helping, advance engineering skills to engineer more efficient, more sustainable solutions for hardware. So there's many ways that companies in our space can show leadership here. We're definitely exploring, the gamut at the moment and trying to figure out what makes the most sense for the business. but equally what could have the best impact, outward focused and on the climate and the communities we serve.
Somebody asked a kind of a specific question. So what do you think about tagging coins as green or having price differences for Bitcoins versus other cryptocurrencies that come from green mining operations? Do you think there's anything that can be done there to signal to buyers, where this Bitcoin has been mined, how it was mined, or another cryptocurrency?
Yeah, I definitely have thoughts on that. But Sue, do you want to take it first, or do you want me to go ahead?
I'll let you take this one.
Okay. I mean, it's sort of like greenwashing, right? I mean, we can tag anything as green, but what makes it so? What are the metrics? What are the standards? What does that mean from an operational perspective? Are the pools that are being used green themselves, and what would make them green? Are the partners that the company's engaging with, what are they doing? Where are they sourcing their equipment? Where are they sourcing their power? What are they doing to offset their carbon? Like this is where I think the standards exercise is so important. And even if they're, best practices that we start with, which we often see in the standard space, you'll see best practices, then they'll eventually move towards standards, and then periodically they'll even move into actual hard law. In this case, we can tag lots as green, but says who? And this is where I think,
Forgive me, Sue, really quickly, you're still screen sharing, just in case.
Got that.
There we go.
All right, go ahead, Tanya.
Yeah, no, not at all. It's a busy day for Sue, as you can imagine. But this is where I think we have to keep working on our standards. This is where I think we're going to, the organizational effort of the Bitcoin Mining Council is going to be incredibly important. We know our industry the best. We know how to challenge each other to be better. And we know the options we actually have today as far as operational optionality goes. I mean, optionality is such a good word because you can use it for a whole host of things. But if we can only source certain things from certain places, how do we help those places where we're sourcing things be better as well? And how do we help steward in better behavior? I think this is a bit of a longer answer, Brian, but it is a really important question that you've asked. And I think this is where the bulk of the work needs to be done now by industry. And so let's try and get there, but let's be mindful not to quickly, put tags on things that aren't actually substantiated by any data.
Thank you. Andres actually, I think, piggybacked on something you mentioned. So he asked, what do you think about standardizing the measurement of mining energy consumption?
So I will take that, and apologies, guys. I'm still sharing my screen there. It's a very big day for us that we've listed on the highest tier or we are listing on the highest tier of Nasdaq. Very timely question. Michael Saylor actually just tweeted about us. So we think that's very important. Transparency is one of the pillars of the Bitcoin ecosystem as a whole, and the foundational pillars behind Bitcoin. And about 2 weeks ago, for those of you, I'm not sure if any of you follow us on social media, but we actually announced that we joined the likes of Michael Saylor and Argo and Marathon and Riot and Hive in creating a Bitcoin mining council. And effectively what this council is about sort of proactively telling the market that we are committed to transparency in terms of the energy we use, and in terms of our ecosystem and our environmental footprint, and that we're making a concerted voice together to say that we are committed to that. We actually had Jamie on a call with Michael Saylor and Elon Musk 2 weeks ago as well, which was really exciting. Because Elon has been tweeting about his concerns about the environment and whatnot. So he was also in support of it, and that was fabulous. So yeah, we think transparency is what the Bitcoin philosophy and ecosystem was built on, and we are excited to take a leadership position in terms of the environmental footprint as well.
Thank you for that. Nick asks, could you expand on what you actually mean by carbon neutrality and carbon markets? Do you plan to target neutrality by achieving it on site, or what are some of the offset schemes you plan to look into as well?
Yeah, Sue can expand on it. I mean, I'll just keep high level here. I think we described a few ways to offset carbon. I mean, you can plant trees. I mean, that's one of the world's most obvious ways. But there's all kinds of ways to do carbon recapture. This is where Ronnie in our company is an absolute expert. And as mentioned, I mean, we hope to ultimately achieve carbon neutrality in the not long off future. And Sue was mentioning, working with RBC. So Sue, maybe you can, we are not yet working with RBC, so I want to make sure it's something we're considering. But Sue, maybe you can explain what RBC does and how they relate to this.
Yeah, so I think, when you're looking at carbon offset markets, and you have to be very aware as to whether or not the carbon offsets that you're purchasing and that you're trading are actually creating a similar impact to the levels of production and pollution that your own company is creating. So, for example, some carbon offsets address things like replacing power-fired ovens in Africa with instead wood-fired, and that's better for the environment. However, if you're an enterprise producer producing quite a bit of waste, that's not exactly an apples to apples offsetting. And RBC has very strict and thorough KYC with respect to their carbon markets credits, so that they have sort of the best in class in terms of matching, making sure that the amount that you're emitting, are you actually doing an equal or if not greater level of offsetting. So that's what we mean by that, and why, yes, as per Tanya, our head of legal and regulatory, we haven't established that. We haven't finalized those terms yet, but we do look to them as probably the leading provider in this carbon markets in terms of the KYC that they do on the actual offsetting providers. So we think that's really important as well, to make sure that you actually are doing an equivalent or greater offsetting.
Yeah, I think Sue raises, an excellent point. And when we're talking about investors, obviously working with RBC would be optimal. And we've got to work within financial structures to make sure we're all speaking the same language when it comes to, our stock and how we're performing as a company. There are expectations that pre-exist our space. And so it's brilliant the work Sue's doing, and Ronnie, it's awesome. The other thing, of course, just to layer in, is buying carbon offsets isn't the be all end all of everything. I mean, really, truly, if we're committed, we need to take top down, bottom up approach. That's everything. That's through and through operations review. That means we're looking at more. We're constantly challenging ourselves to innovate. And I've spoken on this before, but our niche, our industry is going to be the sector where the leading innovation happens for the world. What we do here, because so much pressure on us, is pressing us to do better, to justify our existence. We don't have a choice but to do better. We will lead the innovation as well in this space for larger data centers. I fundamentally believe that. And I think it's just a matter of time. And sometimes time means 5 or 10 years. But I think it's just a matter of time where the rest of the world will come to understand that the innovation that happened in the blockchain world, in the Bitcoin mining world, was what set us forward to have a more sustainable future. So I'm very bullish on our capacity as innovators as well.
Yeah, I think that's a very interesting perspective, and to not just look at it in the context of just crypto mining, but rather the implications that it could have for other industries. Somebody asked, has anyone actually researched energy output of mining on a global scale, especially compared to legacy systems? Perhaps some resources, but I think the question about compared to legacy systems is interesting, and whether there are resources that do that.
Yeah, so Galaxy Digital actually did a really interesting report on crypto miners globally and their use of renewables versus the traditional banking system versus oil and gas, I believe it was, versus the US and versus China. Mm-hmm. Sophia, maybe I'll send you that article and you can tell.
Yeah.
Once I find it, I can't remember it off the top of my head. But what's really interesting, and I think one of the reasons why sometimes Bitcoin gets such a bad rap in terms of environmental impact is because it's so transparent. It does make it quite an easy target, because everything is publicly available. All the information is publicly available, versus the US banking system. It's so incredibly opaque and nuanced and siloed. Like it's difficult to gauge in a publicly available way the total footprint for that, or again the amount of energy spent on making sure that the US dollar is the world reserve currency, the amount of war and strategic sort of energy use put towards the geopolitical relationships. Like there's no real way to transparently gauge that. But anyways, the Galaxy did this really good report on the amount of renewables used versus other industries and countries. And I think it was Bitcoin worked out to the industry as a whole is about 33% uses renewables versus the US was about 11%. And I think China was about 8%. Again, Sophia, I'll get you that article so you can send it out to people, or maybe I'll post it on our Twitter. But there is some research out there, but it's still sort of few and far between. And but I think that the narrative around, well, let's look at everyone else and let's actually do a thorough deep dive here, is definitely gaining some momentum.
Yeah, and I will add, I'm aware GBBC is working on a variety of fronts to pull global data together and show sort of what's been happening. So very excited to see, more research in this space, and just want to give a shout out to GBBC because you have been doing a lot of research, and it's, our industry moves so fast that benchmarks may not, appear like benchmarks. I mean, like what's 1 year difference, but 1 year difference can be quite significant in our world. So yeah, please keep researching. Nudge, nudge, maybe do this one.
Thank you so much for the shout out, and absolutely we'll take a look for the Galaxy report, because I think to your point, the when you compare it, it puts things in perspective a little bit as well. Maybe one final question here, and I think this one might be perfect for Tanya from a legal perspective. Somebody asked, so Marathon had started to screen transactions, and this had gotten them some attention from OFAC. I was wondering if you could maybe speak a little bit to the idea of screening transactions, what that means, and maybe the regulatory scrutiny that could.
So FYI, just quickly before Tanya starts, they actually have now rescinded that intention, but carry on, Tanya.
Well, I feel like, Sue, you might be placed for this one. I mean, I'm very much a regulatory nerd, but as Sue was leaning into a little bit, I mean, KYC AML is important. I think anytime a company, my high level statement is anytime a company is doing anything that's different, regulators are going to raise an eyebrow and say, why are you doing this? And, is there a reason for doing this? What's your purpose? I certainly don't have the insider knowledge of Marathon and why they started to do this. And I'm sure not many people do. The fact that they've rescinded is very interesting and probably the right thing to do. But Sue, maybe you want to comment on this if you have anything to add. If not, I don't want to put you on the spot. But
yeah, no. So we definitely believe that in order for the Bitcoin and the blockchain and the crypto ecosystem to thrive, there needs to be a way that it can formally interact and transact with the traditional financial ecosystem. And that obviously means compliance, that means, taxation, that means, adhering to rules, and in return, getting support for innovation and, being allowed to exist and coexist, with government support. So we really believe in that. And we do think that is very fundamental to this industry surviving and thriving and coexisting and mingling and collaborating and everything. So the Marathon thing was interesting because from two factors. Number one, quite frankly, we couldn't really figure out how they were planning on parsing transactions from the blocks. And it also somewhat went against the entire ethos of the ecosystem, which is decentralization. And if you're going to have one player that is deciding who is legit, who is not, who is sanctioned, who is not, that again, it sort of goes against everything what Bitcoin and the fundamental pillars that it was built upon. So we're very in support of KYC, AML compliance. The pools that we join, Luxor, Foundry, are very in support of KYC, AML and compliance. But no, we weren't in support of that because it's not what Bitcoin is about. And funnily enough, about, again, 2 weeks ago, Marathon rescinded their involvement in that initiative because I think that they figured that out too, that it was sort of an antithesis to what they got into this industry to begin with. So yeah,
we definitely have to keep to our principles and our core philosophies. So yeah, censorship of any form is a bit troubling, but
yeah. Thank you for that. And thank you so much for this presentation. It's been incredibly insightful. I personally have learned so much, and I think to everyone that was able to tune in today, they also learned so much. And to everyone who watched, thank you for your insightful questions. It's been great to have so much audience interaction and interest. A recording of this webinar will be shared. We'll circulate links to learn more about HUD 8, the recent news of the listing on Nasdaq. Congratulations to both of you and to the team at HUD 8. That's truly tremendous news. Before we close out, I'll leave you with any final words on what's on the horizon, what we should look out for, and what do you expect for the space 1 year down the road, 5 years, 10, whatever timeline you'd like to use.
Do you want to take it first? Or you want me to go?
You go first. You
of course, in my head,
our
I'm like,
visionary. She's the visionary.
no. In my head, I'm like global domination and rocket ship emojis. No, I mean, I really have a deep respect for the innovation happening in our broad industry as a blockchain industry, which I know there's resistance to call it that, but it is that. And also in the Bitcoin mining space, I am tremendously hopeful and very bullish that it will be innovation in the mining space that will help advance more sustainable computing, more sustainable power use, more sustainable financial innovation. And I'm so beside myself excited to see it come to be and come to bear. I know there's so many innovators around the world thinking in our space on these problems, and they're all challenged right now to do something about it. So I'm bullish, I'm excited, and definitely excited for HUD. Sue?
Yeah, look, there's a world where for HUD in particular, I see us as being like the Tesla of digital asset miners. So not just digital asset miners, but, energy stewards, nascent technology evangelists. I see a greater world where HUD 8 is the bridge between traditional and then this nascent forms of high performance compute, with a very diverse and female leadership at the helm. And I don't know, Tanya summed it up perfectly, I thought. So I have nothing else to add.
Thank you so much for sharing more about HUD 8 and also your insights and visions into the industry and what this all means for the bigger picture. So we appreciate it, and thank you to everyone who tuned in. We look forward to seeing you again.